If you are age 70 and a half and older, you can actually take withdrawals from your IRA and give them directly to charities in the form of a charitable contribution. These are known as qualified charitable contributions, or QCDs. And they are not taxable to you as the owner when you take money out of your IRA in that case. On the other hand, they're not deductible to you as a charitable contribution either. So you can contribute up to $100,000 per year using a QCD. And then why would you want to do this? Why would you want to not get the deduction, right? You think, well, what's happening is when you normally when you make a contribution to a charity, it's an itemized deduction. You can write it off against your income tax in a way like it's on your itemized deduction list, Schedule A. And so the problem is everybody gets, like if you're a married couple and you're over 65, you get $30,700 already as a standard deduction that you're going to get. So you have to be able to exceed that before you even get $1 of deduction. Yeah. Many people, if they don't have a mortgage and stuff and they're older, they're not there.
With the 10K cap on state tax, most people aren't getting there anymore.
Right. So they're not gonna exceed $30,700. So they might make a contribution, they get no benefit tax wise. Yep. So that's why in that way you can use the QCD. You can take the money out of your IRA, not pay tax on it. And it works the same, really. I mean, normally if you take money out of an IRA, it's taxable. Then you make the contribution, it's deductible. The net is a zero wash if you're lucky. This is an automatic wash. Yep. And there's no, consideration about the itemized deduction limits or anything. Yes. So it's a better mousetrap, really, for many, many people.
Agreed. And if you're over 73 and you're forced to take RMD and you don't need the money, a lot of people will take it, transfer it into their brokerage account and reinvest it. Consider donating it to a charity. And then you don't realize any of that income.
Right. And another little pro tip is if you were going to pay tax on your RMD anyway, right? So let's say you're going to take $30,000 out as an RMD and it was going to be taxable. You could actually give that $30,000 to your favorite charity. If you're already charitably inclined, you may be doing it anyway. And then now your tax is zero, right? So you could, to be able to get back to where you were before, you were going to have $30,000 taxable with the IRA distribution, RMD. You could take the money out and do a Roth conversion.
Yeah.
And you're in the same position you would have been in before.
Yep.
And it kind of works out that the Roth conversion is not taxable that way.
Yeah.
In a backhanded way.
Sort of, because you're going to pay the tax anyway.
Right.
You're the same.
So QCDs are a really good thing.